Okay, I would like to welcome you in DD309B in the spring semester. You all know the rules of AOU because you already took the DD309A. Today, our first session, we will give an overview of the course calendar, which includes all the chapters that will be covered and the DMAs or the project that you are going to do. And we will start explaining part of chapter 1. Okay? I just want to warn you that you should be in class on time, since we will be recording this session as well as other sessions. Okay? We'll start with the calendar. Week 1 is course introduction, so we will introduce the course. The course is continuation to DD309A. We are going to use part 2 books. We have 2 books in part 2. Okay? So we have book 2 part 1, book 2 part 2. We'll start with book 2 part 1, which is chapter 11 about environmental evaluation. In this chapter we study an introduction to the importance of measuring the environmental projects, how to measure environmental projects, their benefits, their cost-benefit analysis. We study the theory of environmental valuation, how to evaluate environmental projects, and because whenever a government wants to do any new project, for example, they should study the environmental aspects, okay, and how does it affect the society. We study the revealed preference methods and the contingent valuation. All of these are concepts that fall under environmental valuation. These are very important concepts, and this is a very important chapter which has many points. We will explain part of this chapter today. Chapter 12, the week after, talks about social discounting and intergenerational justice. So we study why these social discount rates matter, discounting in a second best word, and the ethics of discounting. So as you can see, there are many sections in chapter 12. They will be covered in details in week 3. Chapter 13, economics, ethics, and climate change policy. It talks about climate change as a production externality, making decision about time use, adaptation to climate change, and social justice. As you know, climate change is a very important aspect these days. Okay? We are living in a world where the climate is changing, where we have the global warming. And global warming means temperature is rising, and this may lead to problems, especially for the next generation. And problems are already started to appear. That's why the United Nations and countries, developed countries, developing countries, are all worried about this issue, and they are trying to find solutions, study the economical and social aspects of climate change. In this chapter, we are going to cover this idea. In chapter 14, we study utility and decision making, but from the expected utility and markets of insurance, assumptions and concepts of expected utility. So here we're not studying what we studied in 309A, utility consumers utility and choosing between two goods. We are going to study and concentrate on markets of insurance, for insurance, and utility and decision making in such markets. Chapter 15 talks about wage determination, discrimination, and segmentation in labor markets. We cover wage determination, nature and causes of labor market disadvantage, economic models of discrimination. As you know, do you know what is the labor market? Labor market, we have the labor demand and the labor supply. You know that we have discrimination in labor market due to race, to gender, okay, color, age maybe. This discrimination leads to economic and social problems. Discrimination means you do not employ, for example, black people in your company or people of certain religion in your company. This has social impacts. And of course, human rights is calls for no discrimination, calls for equality. Okay? So in this chapter, we'll study what determines wage. It's usually the labor market, the demand and the supply, but we study that in details. We study the causes of labor market disadvantage and models of discrimination. There are models that talk about discrimination and how discrimination affects the economy, affects employment, etc. So this is an interesting chapter. Chapter 16, the economics of care, needs and norms, and productivity and rising wages and effects of rising costs. Economics of care, it talks about the importance of care in the economy. When we say care, for example, caring for your children, this is an example. It has costs are rising, and we study the economics behind care, okay, which has certain economical impact. In week 8, this is up to week 7. In week 8, you are going to have the first exam, which is the midterm exam, which is 30% of your final grade, as you know. It will cover probably the first 7 chapters. Okay. No final decision taken. We will inform you when we decide. But most probably the first 7 chapters.
For 6 chapters?
Well, yes, 6 chapters and the introduction. So. In week 9, we go into finance. Now, we move into different aspects. Business finance, you study important concepts related to, in chapter 17. Business finance, you study borrowing and investment by firms, project appraisal, sources of capital. Okay, business finance. What's finance? And businesses want to finance themselves in order to be able to produce and survive. The financial part is very important for businesses. You agree? Businesses usually, how do businesses finance themselves? Either through capital stock, the stocks, the shares. Owners usually have shares in the business, or through bonds, in other words, borrowing from the financial market. Okay? Bonds means to issue bonds to borrow, but for you to be able to issue bonds, there are certain regulations, and you have to be listed in the stock exchange, and you have to be a corporation. Okay? You cannot have sole proprietorship, one owner business listed. Partnerships where 2 or more have a company that is not listed in the stock market, you cannot borrow from the stock market. You can also borrow, of course, from banks or from lending institutions. So you study, of course, businesses to grow, to expand. Usually they may need to borrow money to expand their investment. We study the sources of capital and project appraisal. We will, of of course, study them in details in chapter 17, business finance. In chapter 18, it talks about technological change, theory and policy. We covered this chapter in week 10. This chapter is about technological change. So we study the importance of technology and technological policies in growth and helping businesses to improve. And you study first process versus production, process innovation and production function. You know what's process innovation? Means to come up with, to improve the already existing business process. The way the product is produced or the way the business is done. Process innovation means to come up with new ideas to improve the process. There is, of course, product innovation where you improve the already existing product. Okay? These are, you need to have process innovation and product innovation, you need technology. That's why investment in technology is very important to create process and product innovation, which will lead later into economic growth. يعني كتير مهم الاستثمار بالتكنولوجيا لأنه بتؤدي لنمو وبتؤدي لكرياتيفيتي وبتؤدي ل process and product innovation. And we study process innovation and its relation to production function. Production function, we studied production function. Q is a function of capital and labor. Also, we study science, technological change and economic growth. As we said, there are some models like Solo's model. Solo's model talks about technological change and economic growth. Okay? If you have improvement in technology, you will have economic growth. And beyond market failure and the linear model, we also study the linear model, which is very important model of technological change. I just want to, for you to be aware of the fact that not all sections are required. You need to study the sections that are in the syllabus. So there are some sections that are not required. And this syllabus is already available on Moodle, so whenever you are studying chapters, you need to refer to the syllabus. And you need the book, and you should study, in addition to the slides, you should study from the book. The book is the base for you to study from. Yes?
Do we use economic modeling in all these chapters?
Well, not too much, but we may need, and we prefer, and we encourage you to use economic modeling in your project, which I will just talk about now. Okay? In week 11, we will be discussing projects. You know that you have multi-MA for this course. You have a project, details about the project, how many pages, the format, etc. will be given to you later. However, it's of course usually larger than LTMA or multi-MA. You need, in my course, you usually present your final projects. In addition to submitting them on Moodle, you give an oral presentation and we discuss the project in class with your colleagues. I ask you questions, maybe 5 or 10 minutes presentation for each student. PowerPoint, you include the main points in your project. The project should be related to one of the topics covered in DD309. One of the topics covered, you can choose it. Okay? It depends on you. Okay? I will not enforce any project on you. If you like any of the ideas here, any of the chapters that you think for you it's interesting, you can choose it as a topic. However, as I said, you need to use economic modeling. In other words, try to run a regression analysis, come up with a relation between two or more variables, and explain your results and test your results. So statistics is important in your project. Okay? Analysis is important in your project. You don't need only to depend on existing data and information. You want to try and give certain value added. Okay? يعني تكون عندكم قيمة مضافة بالprojects تبعكم. Suppose you choose about financial markets in general, okay? Or borrowing and investment by firms. You need to take an example of a company and show how is it financing its projects, etc. Or you choose about financial markets. Suppose we have two different types of financial systems. We will study them later. Bank-based and market-based financial system. Let's suppose you want to write about this topic. Then you need to study an example like financial system in Lebanon. Okay? So you need to give an example, and this should be part of your assignment project. And you need to have in the project what we call literature review. Literature review, do you know what's literature review? Literature review means you need to revise what others, economists, academics, articles that are written about your project, summarize them briefly within your project. So before you start your own analysis, your own case study, you need to set apart for literature review. Of course, I don't need to remind you that in your project, like in any other TMA, you need to respect referencing, no plagiarism. You need to respect the rules that you already know about that. You need to use the e-library. You need to use, you may need the book. You have other resources in the library, not the e-library, also the library of the university, or internet sources. Okay? When a few weeks later, maybe 3 or 4 weeks, we may start discussing more about the project, because I don't want it to have short time for your project. Questions until now? You can be active even though we have a camera. No questions. Okay? The project is 20%. The project is 20% of your final. The project is 20% of your final grade. After week 11, in week 12, we studied chapter 19, Managing the Knowledge Economy, Skill Formation, Competition Policy and Innovation in the Knowledge Economy. You know we live currently in the information age. We have the knowledge economy. Knowledge is very important. Skills, education, etc. All of these are knowledge, but you have other sources of knowledge that you acquire. Now, what's very important is a human capital. Okay, your knowledge in general is very important, and that's why we're studying knowledge, managing knowledge in the economy. Knowledge is an asset, and we study how does it affect the economy. Of course, companies that have, for example, more information and knowledge about the markets can have higher profits, can have competitive advantage. That's why we study this chapter. In week 13, you need to submit your TMA, which is, in fact, the project, okay, the project. And you have in chapter 20 the microeconomics of capital markets. In this chapter you study institutional overview of the bond and equity. Do you know what I just mentioned? Bond and equity. Bond means debt. A bond means debt, while equity means shares, means ownership. So if you have shares in a business, you are one of the owners. You have equity. If you lend money to a company, in other words, you buy a bond issued by a company, you are a lender here. You are a lender. The company is the borrower. The company borrows through issuing bonds. So we study the difference between bonds and equity from an institutional overview, and we study capital market equilibrium and capital market efficiency. Of course, this is very important concept, capital market efficiency. As you all know, we didn't yet go out of the recent financial crisis in 2007-2008. This global financial crisis, أزمة المالية العالمية الأخيرة، بعدنا عم نحس بتداعياتها لحد هلا. It is still there, existing. Its consequences did not end. And one of the reasons behind this crisis were the lack of regulations in certain financial markets or capital markets. So capital markets, if not well supervised, if we don't have efficiency in capital markets, well, this may lead to economic problems. So financial markets, capital markets needs to be well regulated. So we study capital market efficiency and equilibrium. In week 14, the last chapter will be explained, which is chapter 21, financial intermediation and risk, banking and insurance. This is an interesting chapter where we study commercial banks, intermediation and credit risk. You know banks, you know we have many types of banks. We have commercial banks,
Specialized banks.
we have specialized banks or investment banks, we have Islamic banks.
Central.
Okay. Commercial banks have different role than investment banks. In the US, before the crisis, they were doing somehow similar activities. There was no separation of the both commercial and investment banks. In Lebanon, we already have them separated. Commercial banks usually get deposits and give loans. This is their role. Their role is to be an intermediary, wasit, between lenders and borrowers. They get deposits between investors and borrowers, lenders and borrowers. Okay, you have money, you go and deposit them in a bank. The bank should give a loan to those who need financing, who need to borrow. So it is an intermediary between the two. It has an important role in creating economic growth. Banks should give loans to mainly to productive sectors, IT, education, to promote growth. They should not mainly finance the government, they should finance, their main role is to finance private sector projects, new projects, innovative projects, entrepreneurs. Okay? So the commercial bank takes deposits and gives loans. It cannot go and invest in capital and financial in the stock market or financial market in the stock market. They cannot, like in Lebanon, they are forbidden to invest in risky financial instruments. While investment banks, they give medium and long-term loans, and they are more considered specialized banks. So investment banks can invest in stock market. The role of the two is different. So we study this chapter basically commercial banks, okay? Not investment bank. We study commercial banks and credit risk. You know, when a bank gives a loan, there is a risk that the loan is not returned. Right? That the one who got the loan default. This risk is called credit risk. يعني يمكن واحد ياخد لون وما يرجعه. ففي مخاطر. هذه المخاطر اللي بيعاني منها البنك، وحدة منها هي الكريدت ريسك. في other risks. There are many other risks other than the credit risk. But this is very important. There is operational risk, legal risks, etc. That's why there is now the Basel 1, 2, and 3 Basel. It's a place in Switzerland where the Bank of International Settlement exists. The BIS, which is the bank of the central banks, if you want. There are many central banks that are members of the BIS. The BIS issues recommendations called Basel recommendations. Usually central banks use these recommendations in their local regulations to regulate banks and supervise banks. So Basel هي اتفاقية هي نوع من مبادئ لحتى نأمن إنه المصارف عم تقوم بشغلها من دون مخاطر أو بأقل مخاطر، ونخفف من مشاكل انهيار المصارف، ونخفف كثير من الكريدت ريسك والاوبريشنال ريسك وغيرها من الريسكس اللي بيعاني منها الكوميرشال بانكس او القطاع المصرفي بشكل عام. So to avoid risks, there is the Basel recommendations. We are going to study the credit risk and how to mitigate or reduce or avoid this risk. We will study insurance, and well, banking and insurance. In some countries you have deposit insurance. Deposit insurance means if you put money in a bank, it is insured. So even if the bank goes bankrupt, you will get back your money. In Lebanon we have deposit insurance, but it's up to a small amount. Even if you have, for example, 200 million, maximum you can get is 10 million. This is the deposit insurance, okay? Even though in Lebanon, whenever a bank goes bankrupt, when it happened, all depositors got back all their money because the central bank interfered and returned back the money. But deposit insurance is an institution that insures deposits. So if you put deposit in a bank, you will know that your money comes back. Deposit insurance exists in many countries, and usually it is not for the whole deposit, it is part of the deposit. And we study financial regulation. This is very, very important, even though it's just a section in chapter 21. But as I told you, after the global financial crisis, many studies issued by international institutions are focusing on how to improve financial regulations. Financial regulations will reduce risks, and the recent crisis shows that there was some lack of strict or financial regulations are needed. There should be an improvement in financial regulations. They exist. Financial regulations are there, but we should have more. We should be more strict, okay? And we should have more supervision over banks and financial institutions to avoid or reduce the risk of a future crisis. Week 15 is the review session, and then you will have the final examination, which is 50% of your final grade. So again, 50% for the final, 20% for the project, 30% for the midterm. Do you have any questions about the course syllabus, about... No, ask. Any new students? start at 6. And I have office hours from 5 to 6. I will be ready to answer your questions. As I told you, this part is really, it's not easy, so you need to study really hard. Okay?
لا
باين خلاص ماشي
شاشة حتى
كده قاعد مهم بس ارجع مش تمام
بدنا نضوّز مشان يبين اوضح next time يظبطوا معي.
انا بصير يطلع كتير عند البورد. استاذ كل السيشن بيكونوا مع كاميرا ولا بس اول ثلاث؟ مش
نحن هذا النت. Okay, before we start with chapter 11, the first chapter, we will explain part of chapter 11 today. We will continue in the next section. Sorry, what's your name? It's your first session? You took the A? You don't have to. If you didn't, you can take B. Even if you did not take the first part, they are not, it's fine. Who had a question? Or what was your question?
About the TMA or the project.
Yes.
Okay, I don't understand what are the subjects for
Okay.
what we have to do.
Yes. We are still in the first session. The topics need to be related to one of the chapters taken in the DD309B course. Okay? We will see if you can take any topic related to part A, but for now, it's better to be related to part B of the course.
And one of the chapters.
One of the chapters, for example, yes, business finance.
Any chapter,
For-
even chapter
and
1?
even any of the chapters. However, since when you are going to choose your projects, maybe some chapters are not covered. I am not sure how much you can choose a chapter that is not yet covered because you don't know the information and it is not explained in class. Okay? can look at the titles of the chapters, make your own research, come up with an idea, and we will discuss it either in class or during office hours. However, it is still early to do that.
Starting week 5 مثلا.
Yeah, maybe week 5, 6 we'll have a better idea, and at that time it's good to start. Okay, chapter 11, DD309B, book 2, part 1. This is the book, and since we are going to have some graphs, please, since some graphs are not available on the slides, they are in the book, you need to bring the book with you, all of you. Okay? For now, for the coming sessions, it is book 2, part 1, and as you can see, it is the first chapter in the book. It is chapter 11, because we already took 10 chapters in part 1, which is DD309B. Okay? This chapter, the title of this chapter is Environmental Valuation. The sections required are 4 sections. Section 1, the introduction. Section 3, the theory of environmental valuation. Section 4, revealed preference methods. Section 5, contingent valuation. Okay? As I told you, in the syllabus, for each chapter, you have the sections required. And you need to study. In addition to the slides, the study guide, you have the book. Okay? You need to study well from the book. It is a level 3 course. Slides are not enough, and you cannot write your own general information in the exams. In fact, in this chapter, we are going to talk about environmental, if you want, economics. Okay? Whenever we already took something related, but this is more, this chapter has many new ideas and concepts. We took something similar in DD309A when we talked about the CBA, cost-benefit analysis. We had marginal, we had the benefits and the costs, social benefits and social costs of projects, etc. This chapter is related in the concept, but it has new ideas. And as you can see here, we are going to study theories. You have the revealed preference method, the contingent valuation, and the theory of environmental valuation. All these theories aim at trying to give a value, economic value, monetary value of an environmental project. Suppose you want to have a road in a certain place in the mountains where you have a forest. Okay? You want to have a new road. The government decides to open a new road there. You need to see there are costs of opening this road. And some of them are social and environmental costs. You might be hurting the environment. This may, because forests, you may have animals growing there, certain species, you have nature. You want to have a road there, you have wood, etc. So there are environmental costs for opening this road. But there might be also benefits, or there are benefits for the society from opening such a road. Okay? You try, in this chapter, it tries to give ways on how to evaluate partially from a monetary view or money valuation of the cost, okay, and money valuation of the benefit. You for some people, this new project may harm them. They consider it bad. Okay, there is externality, according to them. There are bad effects, negative effects of having this law. For others, there are positive effects. One of the ways, for example, suggested in this chapter, they tell you that in order to try to evaluate the project, you need to make analysis, survey, and analyze the data that you get to come up with an estimation. For every one of these models that we will see, or methods of valuation, they have advantages and they have disadvantages, or they are sometimes criticized. Okay? But because the environment is becoming more and more important and because of what we mentioned, like global warming, climate change, okay, it has big costs on societies, on health. It might lead to health risks, not only financial losses. There might be health risks, and it may lead to people's lives being affected negatively. That's why we try to evaluate, and we should evaluate any project, okay? Any new project from an environmental point of view. There is a role, of course, for the government in this issue, because many projects are done by the government, and they may affect the society and the environment.
Infrastructure.
Like infrastructure, like power, energy, like power for electricity in Lebanon. Okay, people around in the area are being affected negatively. You need to try and measure, estimate, quantify the effect in quantity, in value, in money. Okay, not necessarily only money, but money is also one of the ways to evaluate the effects of project. Okay, of a project on the environment. However, another example I can give you is like, suppose you want to have a new road or a new highway in a certain area. One of the effects, for example, is that some people may be suffering from the noise. People living near, there is the noise. It will affect their life. Okay? So this should be taken into consideration. Areas close to the highway or land close to the highway will lose some of its value because of the noise. Okay? People will avoid maybe buying their houses, etc. And the more you move far from the highway, the less the effect. So governments need to look into these factors. These models of evaluating environmental projects are a bit complicated, and we need to try to understand them in this chapter. So the learning outcome, what do we expect from this chapter? First, distinguish different income-based measures of changes in utility as a result of a project, and understand how measure is applied in environmental valuation. So we want to try to look into evaluating environmental project using concept of utility. Two, outline different concepts of environmental value. Try to understand environmental value. Critically assess. We try to assess or study the revealed preference method and stated preference methods of environmental valuation. And finally, we evaluate complementary or alternative approach to valuation involving public deliberation. In fact, the last point is related to what we call contingent valuation. In this session, we will not finish the whole chapter. As I told you, we will start with the introduction. So So this chapter talks about cost-benefit analysis, the CBA, as applied to environmental problems with a focus on environmental valuation. So we are doing like cost-benefit analysis of of projects, of new projects that affect the environment. Examples of the applications of environmental cost-benefit analysis: land use decision. When you want to use a land, you should try to have environmental valuation. Study the cost-benefit analysis. Decisions of building a road, airport, electric power station. All these decisions requires cost-benefit analysis and environmental valuation. What's the effect on the society, on the environment? Okay? Try to give it a value. Try to give the effect a value. فنحاول نقدر الفاليو، قيمة للخسائر أو الإيجابيات لهالمشاريع على الانفايرمنت وعلى السوسايتي. Environmental valuation refers to what's environmental valuation? The definition: it is the theories and methods used in environmental applications of cost-benefit analysis to generate the monetary values for benefits and costs. It is very direct definition. Environmental valuation are the theories and methods that try to estimate or give a monetary value, يعني قيمة نقدية, monetary value مالية, of what? Of benefits and costs, okay, based on the concept of whenever we are going to come up with a new project, we should do the cost-benefit analysis. But here we use the environmental valuation to measure it, to measure the CBA from a monetary perspective. Why conduct a CBA? Of course, we should try, governments, for example, should try to improve wealth, standard of living of the society. Okay? So we should try to maximize the monetary benefit and less than cost. Yani the benefit minus cost should be maximized. In other words, we should try to maximize the benefit and minimize the social and environmental costs. And in fact, the CBA and the environment valuation are important because they are scientific and rational ways to measure advantages and disadvantages. We are using science, we are using theories, we are using rational ways, scientific methods to make the estimation of the benefits and costs or advantages and disadvantages of projects that might take place in the society or the country. Yes? It depends on the theory, and we have different methods to do environmental valuation. You will see that one of them involves utility. So CBA is used by governments in market economies usually. Usually non-market economies, there are some countries like Cuba, Venezuela, North Korea, who are considered command system, not market economies. They do not usually use the CBA whenever they want to come up with, to start a new project. But countries like the US, the United Kingdom, countries with market economies, market means somehow free economy where government role is generally limited in the economy. Whenever they want to start up with a new project, they should make this analysis. This analysis is very important. It's costly. It's not cheap to study these effects, to do the benefit cost analysis. And in fact, before making a decision, if you want to be applying best practices, a government, before making a decision of doing this project or not, the CBA is important. Doing CBA, doing environmental valuation. We shouldn't say, for example, let's do a road here. No, you should study many factors before making the decision. So governments need to perform CBA in order for them to make or to take the right decisions regarding starting new projects. Clear? Yes? Yes.
Planned economy is based on CBA. Planned economy and social systems is based on cost-benefit analysis.
Well, they do not do usually environmental evaluation of projects. Okay. What I'm trying to tell you here, إنه دولة لازم قبل ما تقوم بمشروع جديد تعمل environmental valuation. تشوف the cost benefit of this project, its effect on the environment, on the society, on the people's lives, health. What are the advantages and disadvantages, and we should try to give them a monetary value. Okay, even though some criticize some environmental methods. Why? Because they say that you cannot estimate the life of individuals in money. Or does the life of individuals in poor country different from life of individuals in rich countries? So there are some debates in these issues. We will see that there are criticism to the ways of measurement for environment valuation. So CBA is a method of resource allocation to better allocate resources. You know, in economics, we aim to reach efficiency. We aim to use resources in the best way possible. That's why CBA is an important method to reach or to have resource allocation. And resource allocation means to use resources in the most efficient way. Because you know resources are scarce, limited. CBA applied to environmental problems had turned out to be more controversial than CBA in general. You know that CBA can be applied to environmental problems as well as to other things. Okay? However, in this chapter we are concentrating on CBA, cost-benefit analysis applied to environmental problems and projects. Theory of environmental valuation. So this is section 3. Any questions before we start the new section? Clear the introduction? So the theory of environmental valuation. Most economists see environmental problems as rising from an absence of markets. Markets of environmental goods may be missing as these goods involve externality or have public goods characteristics. Over the past 25 years, researchers in the social sciences and public policy have grown increasingly interested in how environmental valuation affect human behavior, specifically quality of life. So environmental valuation is important because it affects the standard of living, the quality of life. That's why we should do it. It's very important. It has advantages. If you don't do environmental valuation, you might have much more costs and disadvantages than the benefits, and the society will be harmed by the environmental problems caused. So, one of the reasons that economists think that there are problems with environmental problems, and they are increasing because there is no market. Usually when there is a market, there is demand, there is supply, there is prices. This will lead to efficiency, this will reduce externalities, as well as other problems. True? So if there is a market, usually economists won't prefer to have a market. Market means demand and supply, and demand and supply is important to reach efficiency and to allocate resources properly. Okay? If there is no demand and supply on something, there is missing market, this will lead to market failure, and we studied market failure before. And another reason for why environmental problems are rising, because we look into environmental goods from the perspective that they have or they may involve externalities. What do we mean by externality? Externality is a social cost or a social benefit. So researchers, economists are now giving more attention. So this topic that we are studying today is one of the somehow recent, and still its importance is growing day after day because of the environmental problems, and because now we should do environmental valuation, because it affects again the quality of life, it affects the standard of living of the people and the society. Theory of environmental valuation continued. The two distinct theoretical definitions of a proposal are compensating variation and equivalent variation. In order to study the theory, we should first understand two concepts. First one is called compensating variation, and the second is equivalent variation. Compensating variation is a measure of utility change introduced by John Hicks in 1939. In fact, compensating variation, maybe you have studied compensating variation before. It's a concept in economics introduced by John Hicks. In fact, it was not introduced to study it for environmental valuation. It was more for consumer surplus, pricing, etc. Compensating variation refers to the amount, this is the definition, of additional money an agent would need to reach its initial utility after a change in prices or a change in product quality or the introduction of new products. This is the definition, the old one, okay? Where in this definition, we are looking into compensating variation from a different perspective. Suppose prices go up due to inflation. Prices go up due to inflation. Your real income loses part of its value. To remain on the same level of utility, you need to be compensated. But the تعويض, to remain on the same, ترجع to return to your initial utility level of utility. This is compensating variation. And we used to study before, maybe you have studied Glass-Payer index, the PASH index, for measuring change in prices between 1 year and another. That's why the employees call for compensating variation when they should be compensated when there is an increase in prices. The definition that is in the book about compensating variation, which is related to our analysis here, it is the amount of money. Amount of what? Of money required to compensate an individual for a change in utility resulting from a project, because here we are talking about projects and environmental evaluation, by returning them to their initial utility level without the project. So suppose there is a new project. This project reduced your utility, affected you negatively. You should be compensated maybe by the one who did the project. If it is the government should give you the compensation. And the compensation should be money. Should be what? Money. So we opened a highway here. People living near the highway, there was no highway before, will suffer from noise. Okay? The cost of their house affected negatively. They might be affected by the pollution. So compensating variation means studying this effect and compensating those people with money to return back to their initial utility before the project. If the individual is in favor of the project, he would be then making a payment rather than receiving one. If you are getting benefits from the project, you should be, in fact, logically paying money. If you are losing, you should receive compensated money. We will see in a few minutes the figure. By contrast, equivalent variation, it's opposite, is the amount of money required to move an individual from their initial utility level to the level they would have were a project to be implemented. If a project is implemented or is not, in this case it is not implemented. Equivalent variation means compensating individuals or moving them from one utility to a higher utility or to a different utility because as if a project was implemented. Okay? Suppose we should have a highway here, it will benefit many people. Let's make, I'm trying to give you my own example. And this highway was not, the project did not, is not implemented. Some people would benefit from this new project. Okay, they would benefit. Here, if you compensate them, you are doing what we call equivalent compensation, as if the project is done. Of course, equivalent variation is also compensation in money. The project here is not implemented. Now, we can see the figure 11.1, page 50. Let us have a look. If you have, those of you who have the books, page 15. Okay, as you can see, you have on the y-axis you have the income, on the x-axis you have environmental goods. Okay? Because some of you don't have the book, let us read the explanation, figure 11.1, and we will explain it. Can you read it, please? No, figure 11.1 illustrates, yes. And a high voice, please.
Figure 11.1 illustrates this concept for the case of an environmental project where an individual favors the project and benefits from its environmental impact. The individual derives utility from both income and environmental goods, with more of each providing higher utility. Points of indifference curve U1 represent higher utility than points on indifference curve U0. The proposed project will move our individual project from point A on U0 to point B on U1. At B, the individual benefits from the same level of income as at A. That is, Y0 while obtaining more environmental goods by moving from E0 to E1. We know that the utility difference between A and B is U1 minus U0. But how do we quantify this in money terms? The compensating variation is equal to the amount of income, Y0 minus Y, shown as the vertical distance B prime. This is the money payment by the individual that would return the individual to utility level U0 while retaining the environmental improvement. By contrast, the equivalent variation is the payment to or from an individual that would be equivalent to the project in terms of its impact on their utility. In other words, the payment would move the individual to the utility level they would have if the project were implemented. On figure 11.1, the equivalent variation is equal to the change in income y minus y0, shown by the vertical distance AA prime. This is the amount of income that will move the individual from utility level to zero.
Things should be clear for now. Did you understand did you understand what she read? Okay. Sorry, we don't have the graph on the board. Please look at the graph. You have on the y-axis you have the income, on the x-axis you have environmental goods. We are assuming that the income and the environmental goods provide utility for the individual. The more he is getting more environmental goods and higher income, he will have higher utility. So environmental goods affects the utility and income affects utility. Now if a consumer, we are assuming in this graph or in the analysis that the project that took place affected positively the individual. What do you mean by positively? Positively mean if he will be on a higher utility curve. So initially, the individual was at point A. Okay, point A, it is on the lower utility curve. Now the project is implemented. Okay, the project is implemented, and when the project is implemented, the income did not change for the consumer. It is still the same. The project did not affect his income, but now the consumer is getting more environmental goods. So he moves from point A to point B, so he is on a higher utility curve, but without a change in income. The question is, what's the question now?
How do we quantify this amount?
How do we quantify or how do we compensate in money terms? The answer is, in money terms, we go from B down to the B prime, which is the initial utility is measured there. The difference, which is shown y0 minus y star, is the compensating variation. The difference between y0 and y star. How did we measure it? We go down from B to B prime or B star. Okay? How do we measure equivalent variation? It's very simple to understand the difference. Equivalent variation, the project is not implemented. If the project is not implemented, it means environmental goods did not change. If the project is not implemented, it means environmental goods did not increase. Okay? So the equivalent variation is equal to the change y double star minus y0. As you can see, please listen. The individual, please listen, the individual was initially at point A. And let's assume the project that we are talking about was not implemented. Since the project was not implemented, then if it was implemented, then there is no increase in environmental goods, because the project is not implemented. So we don't go from E0 to E1 because no environmental goods were implemented. The project, no environmental goods were added to the individual. No, because the project was not implemented. How do we measure how much should this person or this individual be compensated because the project is not implemented? We go from point A up to the higher indifference curve, assuming if the project was implemented, we would be on a higher utility curve. So instead of being at point A, he will be at point A star. So the equivalent variation is y double star minus y0. So the difference in compensating variation, environmental goods increased, while in equivalent variation, there is no implementation of the project, so environmental goods did not increase. And one point to watch, the compensating variation, it's the money payment by the individual that would return him to the initial utility. Okay? Did you understand the idea? Equivalent and compensating variation. So, compensating variation, please understand, it might be positive or it might be negative. If you benefit, you pay. If you lose, if the project harmed you, affected you negatively, you should receive money compensation called compensating variation in case the project again is implemented. If it is not implemented, we talk about equivalent variation. In other words, environmental goods did not increase. The project is not implemented. So we look at if the project was implemented, how much increase in income should be. This will be the equivalent variation, the difference. It is clear on the graph. The two concepts of compensating variation and equivalent variation are closely related to different methods of valuation in practice through questioning people. Example, if an individual favors a project, then measuring the compensating variation, by the way, compensating variation, it is written CV, involves the individual making a payment, so it will be measured using willingness to pay. So the two concepts again of compensating variation and equivalent variation are related to the different methods of valuation. By what? By questioning people. People may not have the willingness to pay. Okay, even if they are going to benefit from a project, this is one of the problems. Even if you are getting benefit from the project, you may not have the willingness or the ability to pay for the project. This is an example. If an individual favors a project, means wants the project, it gives him benefit. Measuring the compensation variation involves the individual making a payment. Because he benefits, he should pay. Home compensating variation is that he should pay from his own income. While if it does not favor him, he should receive money. So it will be measured using willingness to pay. Again, we come back to the book. Table 11.1, page 17. Page 17, you have the title of the table, Measures of Utility Change and Questions to Elicit Valuation. You have measure of utility change required. Is it compensating variation or equivalent variation? Okay. valuer's preference. Who is the valuers? Who is people, yeah, individual. If he prefers the proposal, he should have the willingness to pay. If he prefers status quo and no change, he should have the willingness to accept. WTA. While for equivalent variation, if he prefers the proposal, he should have the willingness to accept. While if things remain the same, he should have the willingness to pay. So it's vice versa. It's opposite. If you if you favor the project, you should have willingness to pay in relation to compensating variation. But with respect to equivalent variation, if you favor the project, you should have the willingness to accept. Why? Because if you favor the project and to be implemented, and it will be implemented, you should be willing to pay. If you are not willing to pay, you should be willing to accept to remain on the same level, and you should, in this case, you are talking about equivalent variation.
Can you give us an example?
Yes, the example that I just gave you about maybe having, it can be private company or the government wants to implement a new project.
Okay.
If you benefit from this project, you should have the willingness to pay, to compensate, because you are getting what you benefit. Maybe the willingness to pay might be taxes, maybe things like that, or taxes usually are enforced, but willingness to pay because you are getting benefit from the project. If you are against, if you want, the implementation, okay, and the project is not implemented, you should have, even though you get, suppose you get benefit, but the project that was not implemented, you should have, you get what we call equivalent variation, and here you should have the willingness to accept. And I will give you money, but we will not implement the project. Or you will pay money and the project is implemented. If the project is implemented and you pay money, this is, you are talking about compensating variation. If the project is not implemented and you receive money as a compensation because the project was not implemented, this is equivalent variation. So it depends whether the project in the individual, whether the project is implemented, or you prefer status quo, means the same, the status as it is now.
It's usually optional because you can't make people pay for the project.
Yes, it is usually optional, and that's why I told you it's complicated, and you have to see how many are willing, how many are not willing to. And that's why in some models that you will see, or the last one, for example, you need to prepare surveys, you need to ask people by email, by phone, or directly face-to-face. It's not easy. Usually the population who will benefit or who will be affected is 1 million. And you cannot ask all of them, so you need to change a good sample that will give you the right idea about the whole population. So, theory of environmental valuation, again, the compensation variation and equivalent variation may differ substantially, since they use different baseline level of income, consumption, and utility. You know, as we explained, as we already explained, there is a difference between compensating variation and equivalent variation. So, whenever since they are different and they may differ, you should know, and if you look at the graph that we already explained initially, the graph, not the table, you will see that the difference y0 minus y star is not equal to y double star minus y0. So if the project is not implemented in this example, you will see that you will get more money than if it is implemented. In this case, equivalent variation is higher than compensated. So since they differ, you should know which one is the appropriate measure. It may be the, so in order to summarize the point, to evaluate, to make an evaluation, monetary evaluation of the project, of its environmental, of its effects, to make it monetary, we can use either one, CV or EV, either compensating variation or equivalent variation. So equivalent variation, we assume if the project is not implemented, how much will we pay for the one who benefit from the project? If it is not implemented, how much, or if it is implemented, how much the one who benefit will pay as compensating variation because he got benefits from the project. If they are equal, there will be no problem. We will say in making evaluation of a project benefits, we will take into consideration the CV or the EV because they are the same. But since they are not equal, then you should know which one to use. And to give you, to make things even, if you want, easier to understand, suppose you have 10 people who will benefit from the project. So if you want to estimate the benefits from the project, taking into consideration compensating variation, you will say that each one will pay $100. So the environment valuation of this project is 10 times 100 or $1,000. This is, you evaluated the environment, you did the environment valuation. If there are 100 people who will benefit from this project, and you are using compensating variation, and each one will pay $100, so in this case 100 times 100 or $10,000 is the environment valuation. If we want to use equivalent variation, suppose the project is not implemented, in this case $150 will be paid to 100 individuals. So if you use EV to do the valuation, it will be then 100 times 150 or $150,000. This is the benefit to the society because it will be paid to those who did not benefit. So this was the benefit if it was implemented. So here you did evaluation using the opposite way. Okay, so both ways, this is what I want you to understand. The CV and the EV are used for evaluation. Okay, we will stop here today. So again, we explained first part related to the new chapter 11, and now we will stop this. We'll end the session. See you next week. Please be on time, and good luck for this new semester. Sorry? Yes, I will take attendance.